Sales growth accelerated slightly during the fourth quarter relative to the third quarter. That's according to the Ernst Young BR festive season retail survey. Now, the majority of retailers surveyed reported better sales growth compared to the 2012 festive season. Of course, so we're waiting for the final period to play out. Joining us now to discuss this, Derek Engelbrecht, Retail and Consumer Products Sector Leader at Ernst Young. Thanks for joining us.
Thank you.
So we're not working off a very buoyant base, if you could call 2012 that. So essentially, are we looking at a better festive season? I mean, what are people saying out there? I mean, speaking to Doug Murray-Foschini, he was basically saying this is going to be the deciding factor for overall earnings. This is a very important time of year for retailers. What are the feelings out there?
It's absolutely the most important quarter. I think it's well known that most of the retailers bank the serious cash during the next few weeks. So absolutely important that they get it right. You are quite right, 2012 was not a particularly buoyant festive season. And on that basis, when one compares the expectations for this quarter, most retailers are a little bit more optimistic than they were at the same time last year.
In volume terms, I mean, are you able to put a number on the table, given we saw 2.3% year-on-year growth last year, I think it was? I mean, what kind of number are we looking to quantify the growth figures?
Volume growth is estimated to be in the region of about 3%. So again, slightly up on last year, but certainly underwhelming as far as most retailers' expectations are
2010,
concerned.
It was 7%.
Absolutely, and it's coming off an increasingly high base. And hoping that some of that sales momentum growth will continue to feature as part of the growth story into 2014 and 15.
Has this been reflected in what they're doing from an inventory perspective, kind of being quite conservative heading into the festive season?
At the end of the third quarter, we certainly did probe whether there was inventory build-up in the system at large. And at that particular point in time, despite the sales growth being disappointing, there was no build-up of inventory, which means that retailers have also placed fewer orders on the supply chain and are managing that aspect of their business very carefully.
Working capital and all that, in light of also a weaker rand, how's that affecting retailers?
The significant depreciation of the rand over the last 2 years has certainly had an impact. The supply chain for most retailers have captured a lot of costs, which quite frankly the retailers were not prepared and couldn't pass on to the man in the street, and consequently margins continue to be eroded as a consequence.
Yeah, so margins under pressure, but if you had to look at the various subcategories in the retail space, I mean, are there going to be certain retailers in January that are going to be left with a lot more stock than others?
The durable sector, meaning furniture and household appliances, continue to disappoint as they have done over the last 2 or 3 years. Most of the retailers is not particularly optimistic in the run-up to Christmas. And I think it's largely a consequence of the deceleration of unsecured lending. And in terms of that, the impact of the rand will continue to make those products to be unaffordable in terms of current prices.
What about food, beverages, those things that you do spend money on during the Christmas season and perhaps live to regret it in January? But what about that sector?
The non-durable sector reported particularly low points during the year. So we've seen a slight recovery in terms of the sentiment reported in terms of that. And that is largely a consequence of some of the larger wage settlements that happened in a number of industries since June, a slight uptick in the employment rate, and then also a recovery in the petrol price from the highs that were recorded in August.
Clothing, toys, I mean, are you expecting a better year for that sector, semi-durable space?
Yeah, the word that we've chosen to describe that sector is healthy. So they've obviously been consistent performance from a volume growth perspective over the last few quarters. And the construction and building sector, which is also showing some gradual improvement, impacted very positively on the sentiment reported by some of the hardware retailers.